The market is closed, the numbers are in. Let's take a look at the board, see how we finished again. Let's flash the numbers. There you go. We closed higher by a tenth, 63.48. The broader all shares off, though not by much. Value turnover, 4.6. Decliners beating advancers, 103 to 73. Let's now get more in the markets. Let's bring in Sandra Araullo. She's the Chief Investment Officer of ATR Asset Management. Hi, Sandra. Happy New Year. Great to have you back.
Hi, good afternoon, Mimi, and good afternoon to all the viewers.
All right, so what do you make of the performance of the PSE index in the first 3 weeks of the year?
Yeah, it's been languishing, I would say, waiting for a catalyst. The big event or risk event had been the inauguration a couple of days ago, in the sense that it's where investors have been looking to get direction, for where to go. That said, there has been a very bearish pricing in of Trump 2.0, and given that it's not developing to be as punitive as expected, it might offer some reprieve, no? So I think it's really a matter of the next catalyst that we can rely on to drive markets higher than where they are today.
Okay, before we get to that next catalyst, you did mention Trump. The AI infrastructure joint venture was at the heart of Trump's Day 2 agenda. Are you seeing any locally listed companies from the Philippines that stand to benefit from this AI investment push? I'm thinking the likes of Surtech, maybe.
Yeah. So AI infrastructure, the first thing that comes to mind would be data centers. And apart from the telcos and maybe some property developers that would tend to cater to the hyperscalers, there aren't many direct players that will allow us to leverage on that theme. But then again, in an indirect way, you have telcos through data centers and the property developers.
There was also an interesting commentary, I think it was from Morgan Stanley, and they were talking about how this AI push will provide, quote, an antidote to the deglobalization inflation. Do you think this AI news will be enough to offset whatever uncertainty that Trump injects or whatever trouble he may cause for EMs like the Philippines?
It may not. It's a function of, I guess, what can be delivered. It will be speculative at this point to try to price in something that will offset some other thing that's also uncertain. So I think it does definitely counter some of the risk, but again, at this point, it's very much taking a bet based on a lot of known unknowns.
There you go, known unknowns. So what else? Let's talk about the next catalyst that you're watching out for. What else do you see bolstering the local market sentiment in the short term then for the PSEI?
Yeah, I think it's really, in the short term, the dollar strength. It's because markets were expecting much more punitive declarations around tariffs, for example. So prior to the speech, markets were pricing in 60% tariffs on China. That's what President Trump had mentioned prior to the speech, and now it's 10%. So, and we all know how heavily or how these types of tariffs would disproportionately affect ASEAN, for example. And considering a walk back of very aggressive expectations around what these tariffs might be, it might relieve some of the headwinds that have been weighing our markets down. We also think that considering the current environment, current sentiment, even with a higher equity risk premium that Philippine equity investors are now expecting from their investments, it still gives us some 20% upside to where we are in the market. So we do think that insofar as a catalyst, we think it's more of the lack of risk events in the very near term that might allow our market to come out of this slump of the first 3 weeks of the year.
All right. What about earnings expectations? Fourth quarter and full year 2024 earnings season is about to roll in. What are you expecting to see?
So we expect the market to come to around mid-teens for the full year of 2024, so about 17% earnings growth. We're more focused on our earnings expectations for 2025, and it's a little bit more tempered, lower teens, so maybe 11-12%. That's where we're anchoring our expectations on, which puts our index target to 7,500. So I think it's tempered. It's a tempered view. The story has been, and throughout the times that I've guested on your show, Mimi, I would always say that, it's like super heavily discounted. Your earnings are, the market is being priced in as if we were in a pandemic situation, and we're not. Earnings have been coming in. But again, the risks, the unknowns, particularly around the US and all of these deglobalization themes are coming into play. So I think that, again, it's a patient investor's game. But if investors are willing to stay in the market and stay invested, they will be rewarded.
All right. So just final question, how patient should the investor be? What's the time horizon?
Well, the rule of thumb generally is you at least should have 5 years in the market. In developed markets, it's 10, no? Kasi otherwise, you can hold a government bond, for example, which is a lower risk instrument that will give you, 6% per annum. More steady, less volatile than what you might. So the Philippines in the last 5 years hasn't really returned any, Philippine equity markets, I should say. In the last 5 years, nothing in terms of price action. But the corporates themselves are generating growth. And so from a value standpoint, you're getting high value at a low price. No, so I think again, it's a matter of a 10-year horizon. If we can get 20% this year based on where we think fair value is at 7,500, it remains to be seen what it can be for next year. And over 10 years, it should even out and give you a better returns than fixed income government security would.
All right. On that note, thank you very much, Sandra. Always a pleasure speaking with you. We'll see you hopefully when we see more returns for the index. Hopefully not too long, all right?
Thank you, Mimi.
All right.